Hello friends. July begins this week, and the moment it does, 5 specific changes start hitting the accounts of older Americans, some of them as early as Wednesday. A couple of these are payment shifts that move money in or out of your account on a different day than you expect. One is a deduction that quietly grows your monthly Medicare cost, and one is a budgeting trap that looks like extra money this week but leaves an empty account next month. Some of these you can simply note and move on. Others require you to do something specific this week or the money slips away. Today I'm walking through all 5 in order of urgency, starting with the one that lands on your account in just a few days. Before we get into it, subscribe to this channel right now and turn on the bell. The Social Security Administration does not mail you a personal warning before your payment date moves or your premium changes. They change it, and they expect you to already know. Subscribe now and let's get into it. Change number 1, and this is the one that hits this week. If you started collecting Social Security before May of 1997, or if you receive both Social Security and SSI at the same time, your payment does not arrive on the 3rd of July the way it normally would. It arrives on Thursday, July 2nd. The reason is the calendar. Independence Day, July 4th, falls on a Saturday this year, so the federal holiday is observed on Friday, July 3rd. When a payment date lands on a holiday, the SSA moves it to the business day before. That pushes your deposit up to July 2nd. This is not a problem. It is not a cut. Your money is simply arriving one day early. But if you live on a fixed income, a payment landing on a different day than you planned around is not a small thing. A mortgage draft, a utility auto pay, or a car payment times your normal deposit can clear smoothly when the money comes early. But it can also cause confusion if you were watching for the money on the 3rd and started to worry when it did not show. Mark July 2nd on your calendar so you are not left wondering. Check your account that day. It will be there. Change number 2, and this is the one I want you to pay the closest attention to, because it is the trap that catches people every single time it happens. If you receive SSI, you are going to see 2 deposits this month and 0 next month. Your regular July SSI payment arrives on July 1st, right on schedule. But your August SSI payment arrives early, on Thursday, July 31st, because August 1st falls on a Saturday, and the law requires the SSA to issue the payment on the last business day before the weekend. So 2 SSI deposits land in July, and none arrives in August. Here is the trap. That second deposit on July 31st is not a bonus. It is not extra money. It is your August payment arriving a day early. If you spend both July deposits in July, thinking the government sent you something extra, you will reach August with nothing in the account, and your rent, your groceries, and your prescriptions still due. And it does not stop there. Because the August payment already arrived in July, your next SSI deposit will not come until September 1st, a longer than usual stretch between checks. If you treat that July 31st money as spent, the gap can become a genuine hardship. The instruction for this week is simple. When that second deposit arrives on July 31st, set it aside completely. Do not touch it until August 1st. Treat it as exactly what it is, your money for next month. Change number 3, the one that comes out of your check quietly and that most people never question. For anyone on Medicare, the standard Part B premium in 2026 is $202.90 a month. That is up from $185 last year, roughly an $18 increase every month, about $216 over the year, and for most people it comes straight out of the Social Security deposit before you ever see it. Most beneficiaries pay that standard amount, but if your income 2 years ago was higher than usual because you sold a property, took a large IRA withdrawal, or did a Roth conversion in 2024, you may be paying an income surcharge called IRMAA on top of the standard premium. That surcharge starts once your 2024 income crossed $109,000 as a single filer or $218,000 filing jointly. To put real numbers on it, the lowest tier adds roughly $80 a month to your premium, close to $1,000 a year, and the highest tiers push the total Part B premium towards $700 a month. And it works as a cliff. Going just $1 over an income threshold can move you into the next bracket for the entire year. Roughly 8% of Medicare beneficiaries pay IRMAA, and many of them are paying it on income from a one-time event that will never repeat. Here is what most people do not know. If your income has since dropped because of a life-changing event, retirement, the death of a spouse, divorce, or loss of an income-producing property, you can appeal that surcharge. The form is SSA 44. It is free at ssa.gov and it exists specifically for this situation. The SSA 44 walks you through declaring the event and the year your income dropped. You attach proof, a retirement letter, a death certificate, a divorce decree, and the SSA recalculates your premium based on your new, lower income instead of the 2-year-old figure on file. The sooner you file it, the sooner the surcharge comes off your monthly check. If you are paying more than the standard $202.90 a month for Part B right now, it is worth finding out exactly why and whether you qualify to have it lowered. Change number 4. The tax check that nobody reminds you about and that catches people with a surprise bill at the end of the year. July is the midpoint of the tax year. For anyone receiving income that does not have taxes automatically withheld, IRA distributions, self-employment income, part-time work, investment income, this is the moment to make sure you have paid enough through estimated taxes. The IRS requires quarterly estimated payments if you expect to owe $1,000 or more for the year beyond what is withheld. Underpay, and the IRS charges an underpayment penalty on the shortfall. That penalty is currently running around 8% annualised on the amount you came up short. Not a flat fee, but interest that keeps building the longer the shortfall sits. For a senior who has never owed an estimated payment before, but picked up consulting work or took a larger withdrawal this year, that penalty can arrive as an unwelcome surprise at filing time. The specific thing to recalculate in 2026 is the new senior deduction. Taxpayers who are 65 and older may qualify for an additional deduction of up to $6,000 under the law passed last year. That can meaningfully lower your taxable income, which means if you have been making estimated payments based on last year's numbers, your payments may now be off. Many tax preparers have not yet updated their clients' estimates to reflect this deduction, so a lot of people are either overpaying the IRS, interest-free, or underpaying toward a penalty without realising it. Your second quarter estimated payment was due June 16th, which has already passed. Your next one, the third quarter payment, is due September 15th. Use this week to check whether your payments so far line up with what you will actually owe for 2026, accounting for that senior deduction if you qualify, so you can correct any shortfall before it grows. Change number 5, the rule that quietly takes money out of the checks of people who are still working. If you are collecting Social Security but have not yet reached your full retirement age and you are still earning a paycheck, the earnings test applies to you. In 2026, if you earn more than $24,480 in the year, the SSA withholds $1 of benefits for every $2 you earn above that limit. Say you earn $34,480 this year. That is $10,000 over the line. The SSA would hold back $5,000, half the amount over the limit, by withholding a number of your monthly checks until that amount is satisfied. If you reach full retirement age sometime in 2026, the limit is much higher, $65,160 for the months before your birthday, and the month you actually reach full retirement age, the limit disappears entirely. After that, you can earn any amount with no reduction at all. Here is the part people misunderstand and panic over. That withheld money is not gone forever. Once you reach full retirement age, the SSA recalculates and credits it back to you through a higher monthly benefit. But if you are working this summer, picking up extra hours, and you do not know this rule, a smaller check can feel like your money simply vanished. It did not. But it is worth knowing where the line is before you take on more work this season. So here is the complete July picture. If you started Social Security before May 1997 or received both Social Security and SSI, your July payment arrives Thursday, July 2nd, 1 day early, not a cut. If you receive SSI, you get 2 deposits this month and none in August. So set the July 31st payment aside as your August money. Check your July Medicare deduction. The standard Part B premium is now $202.90, and if you are paying a surcharge on top of it after a drop in income, the SSA 44 form may let you appeal. Recalculate your estimated taxes for the new $6,000 senior deduction before the September 15th deadline. And if you are working while collecting before full retirement age, know that the $24,480 earnings limit can reduce your check temporarily, but that money comes back to you later. Subscribe, turn on the bell, and share this with someone you know who relies on a Social Security or SSI deposit, so they check their account this week before any of these catch them off guard.